Rising trade tensions between the U.S. and China have market watchers on edge. Federal Reserve Bank of New York President John Williams explaining the downside of raising tariffs earlier on Bloomberg TV.
I do think of the tariffs as, in a way, is like a negative supply shock. And so it has various effects in the economy. One is it affects inflation. It probably will boost inflation by a few tenths over the next year. It affects demand and growth a bit in the short run, but it also has negative effects on the kind of the value chains and how our economic system works.
Our next guest is no stranger to market volatility. He's the co-chairman of one of the world's leading private investment firms, Bain Capital. He's the co-owner also of the Boston's legendary NBA team, the Celtics. Steve Pagliuca joins us now. So nice to see you.
Great to be here, Carol.
So there's so much I want to talk to you about. But first of all, front and center, we've all been obsessed, if you will, by the U.S.-China trade talks, the back and forth, what seems to be maybe posturing, maybe not. How do you see it?
Well, this has been a long time coming. We've had a trade imbalance for 25 or 30 years. And I think initially, when you had emerging markets, it was a good thing, and it's lifted the whole global economy up. I think over 1 billion people have come out of poverty because of global trade. Businesses have prospered. But now is the time these markets are not emerging anymore, and so it's really a time to rebalance, so it's a more fair system, and I think that's what's happening right now.
Now, you guys at Bain, you have investments in China.
We do.
So I'm just curious, you know, Kyle Bass was on our air earlier and just basically kind of saying China's not our friend. How do you see the Chinese market in terms of transparency issues and where they are positioning themselves against the rest of the world?
Well, we've had a lot of success in the Chinese markets, and we've invested. They just crossed over to become a service economy. For many, many years, it was driven by exports and manufacturing. Now it's a services economy.
Right.
So we haven't been that affected, and won't be that affected by the trade issues. So I think it's more of a global issue. And if you think about it, 500 billion of goods, comes in from China to the U.S., and 100 billion goes out. So that's a large imbalance. Obviously, there should be rebalancing, and I hope rebalancing and not retrenchment. If we get into a long-term trade war, it'll have negative consequences for each side.
What does rebalancing mean, though? How do we need to rebalance with China?
Well, we need to rebalance in terms of them taking more of our goods, having similar things on patents, protection of software,
do you think we can
access
get that,
to markets.
Steve, in terms of enforcement of that?
They've come a long way since the early days, and already they've said that the financial services companies can take control positions in China. And so I think they realize to be on the global stage, they're going to have to kind of have the same kind of rules as the Western economies. And we just have to negotiate something and come to the middle. I think it's too important for both economies not to get that done.
These are two individuals, President Xi and certainly President Trump, who like to win, right, and are thinking about their constituencies back home. Is that going to be problematic in terms of actually getting a deal done?
I think they're both deal makers and both strong leaders, and I think they're going to recognize that it is bad for each country to be in this situation. So I'm hoping that cooler minds will prevail. They are good leaders. They're trying to get something good done for each country, and they'll come to the middle.
So all the market volatility we see, do you just attribute that to U.S.-China trade negotiations, or is there something fundamentally also going on in our market economy right now?
Well, I think there's more than that going on. I mean, the good news is we're at record low unemployment, so that certainly puts the U.S. in a strong position. We're at really not much inflation as well. So I think it's a strong negotiating position. The markets are probably as high as they've been in a long time. We've had an 11-year expansion so far. So there probably will be some kind of correction or settling. But right now, the businesses we're in and the economies are doing pretty well. So
in terms of the companies that are under the Bain empire, if you will, anything in terms of the U.S.-China trade, has that impacted them to have to do anything differently in those companies in your portfolio?
All of the companies have looked at contingency plans in terms of changing the supply chain if it has to happen, if the cost of goods are going up too much. Not only our companies, but most of corporate America has gotten out ahead of this because this has been going on for a couple of years. So as soon as this started to go on, our companies worked with our folks to develop action plans. If this happens, how do you make it work economically?
So they haven't switched yet?
They're prepared to switch, and many of them are already diversified in terms of the supply chain. There have been many other countries besides China that have been involved in the global supply chain, and companies have the flexibility to shift those volumes. And companies are very quick and nimble in the United States, so they will get through this. I'd rather not have the trade war. I'd rather not have the tariffs.
Right.
I'd rather have it be settled. but I think the companies will be fine.
Steve, one other thing that certainly we've been captured by is the Uber IPO. Right, and even the Lyft IPO, but I think there's been a lot of stories about what did maybe Morgan Stanley get wrong in terms of bringing this company to market. How do you see it? Did Morgan Stanley overvalue the company? How do you see that?
You know, they actually came out.
Did you guys have any piece in Uber?
They actually came out at the low end of the range.
Okay.
So I don't know if I'd blame anything on Morgan Stanley. I think it was a well-done offering. But we had this volatility with trade. We have a market that is volatile in general because it's at an all-time high, and so anything to do with trade or political tensions, seems to affect the market in the short term. So if you remember when Google went public, Google took a beating and went way down, and now Google
Facebook
has
too,
Facebook
initially.
as well. So there's going to be some volatility in these tech offerings, and I think they got hit at a very choppy time in the market.
I'm also curious about just kind of the general private equity environment, how you see it. There's a lot of cash. We talk about dry powder sitting on the sidelines. What do you think of valuations right now in terms of some of the PE deals that have happened?
Well, no question valuations are high.
Yeah.
But I believe I've got a question on too much money chasing too few deals in the 80s, the 90s, the 2000s,
You've heard this
2010.
movie before?
And by the way, I thought they were all true at all those times.
Yeah.
But Bain Capital has grown from about 36 million under management in '84 to 105 billion today, and had very successful returns. Our latest 3 funds are some of the highest returning funds that we've had. Why? It's because private equity really is a great business model. It really comes in and tries to transform businesses. And so far, the model has proven to go global, help mergers and acquisitions, companies get more efficient, companies get new products. The whole world has changed in terms of private equity, in terms of the value that's being added by Bain Capital, which was actually founded on the principle of taking consulting skills and bringing those to companies to create great businesses.
What are the kind of deals that you're looking at right now, or what are the kind of areas that you're looking at that you're finding interesting?
Well, we view it as a needle in a haystack business, and that's how to stay out of trouble.
Yeah.
You need to proceed with caution in these frothy markets. And so we have a global team of 1,000 people that are looking at thousands of deals, and we kind of cover the waterfront. But in the last 10 years, we've really become specialists in we've always had a big technology practice, so we've reorganized our company to have vertical markets, which include technology, healthcare, consumer retail, industrial, and financial services.
Right.
And we work together as a global team to look at all those opportunities. And you have to start with hundreds of opportunities, thousands of opportunities, and weed them down to a few per year.
What about the real estate that you created a real estate unit, right, I think, at the beginning of last year? And I'm just curious, I think you raised or wanted to raise about $1 billion. Did you hit that mark?
Absolutely.
Do you want to raise more?
We actually, it was a fantastic situation. Harvard wanted to get out of the direct business. They had a fantastic group that fit well with Bain Capital. They were only 3 miles away from us. And Dan Cummings and the entire team came over. One day they were at Harvard, the next day we had office space, and they were at Bain Capital.
So it's worked well.
It was a seamless transition.
Wow.
They have focused on some great growth segments in real estate, such as medical offices, college dorm type facilities, biotech, which is booming in this area.
Ton here.
So they've been very successful, and we're very proud to have them be part of the Bain Capital family.
I got to ask you about sports a little bit. Otherwise,
Absolutely.
everybody's going to yell at me. I'm just curious. I'm sorry that you guys are done for the season. What did you learn this season, leading up to the playoffs?
Well, you always learn it's very hard to have that last playoff game and not be coming back because you think it's going to go forever. We had a great team. We have a great coach. And the ball didn't bounce our way this year. All the credit really goes to Milwaukee, who actually could win the entire NBA. Antetokounmpo is just an incredible player. But the future's bright for us. We'll have up to 4 first-round draft picks this year.
Right.
To add to a crew that is a very good young crew, and a great coach and great general manager, Danny Ainge, with Grossbeck, our CEO, is fantastic. So the future's bright for our team. But this time the ball didn't bounce our way in Milwaukee.
It's just kind of the way it goes sometimes.
Absolutely. And I don't know if I watched the end of the Toronto-Philadelphia game, and a long shot from way out as time expired was going around. I had visions back to my high school days of that happening to me in high school, standing there and watching that ball go in, and then your season is over. It's terrible.
Tell me about Mr. Irving. Is he going to be back with the team?
We can't talk about free agents or any kind of team movements right now, but I'd rather give the money to charity than give it to Adam Silver, who's a fantastic commissioner, but is very strict on these issues. I'm
also curious about sports betting. You've got Fox Stars. They've had an announcement. How do you think that's going to be changing the landscape?
Well, sports betting is already really out there in Europe. Right. It's kind of an everyday happening there. So we're way behind in that. I think it needs regulation. The leagues have to be on top of everything, the officiating, make sure the game is true. But it actually is going to create more fan interest.
And should the leagues have a piece of the action?
The leagues will mainly participate by getting more interest in the games, because it'll bring a whole group of people in. They're going to watch those games to see what happens and what baskets scored and what the scores are. So anything that causes more eyeballs on the screens is great for the league and great for the players, and so it'll really add more excitement to the game.